Good morning, everyone. Thank you, Eric. Thank you, Don and Brooke and Andy and others for the invitation. It's delighted to be here. And for those who are still standing in the back, there are seats on a lot of the front tables, so please feel free to come and sit down. So, Vietnam. It's an exciting time to be in Vietnam. I think the sheer number of people in this room, some of you have come from afar, is validation for that. I've spent 20 plus years of my career at Bain & Company, now a senior advisor to the firm with lots of other roles, but Bain & Company, represented by Andrea Campagnelli, partner colleague here in the room, is also opening an office in Vietnam. And so Bain is not typically the first to go into any of these markets. That tends to be in the big strategy sphere led by our competitor that starts with M. But we're often fast followers, and as VinaCapital and many of the others in the room know, that's often at a time when we see that there is private sector, enterprise, funds, and so on that can support tremendous growth. So just as a parallel to what I hope you're going to find from what we talk about in the presentation here today. So what are a couple of themes that I'm going to leave you with? Number one, I think that the economy, the nation as a whole, but the economy has gone through a transformation over the last several years. Number two, I think that investors are now here focused on growth, and a very wide range of investors. And three, this is not a been here, done that story, but actually a number of us would say the best is yet to come, that the conditions in the market here for Vietnam present themselves very well for investment going forward. Let me bring some of that to life for you, starting first with the transformation that the economy has undergone. If you look at many different time series, and there are economists and statisticians in the room who will say you can play around with data, so I've just chose lots of many different time series. Vietnam looks really good. Fact, okay, if you haven't figured it out, China's not on this page. If China was on the page, then China would be up there looking as good as Vietnam too. But if you just take China out for effect, but compare it to most other countries, Southeast Asia, developed world, and so on, Vietnam is very good on a GDP growth perspective. And in our view, what are the factors that have been driving this tremendous growth opportunity? It's talent, it's infrastructure, it's governance, and significantly improving governance, it's geopolitics and trade, and it's what's happening in the digital economy. And in a few moments, let me just bring you up to date, for those of you who may not be familiar with some of these things, on each one of these 5 points. First of all, talent. And I deliberately started with talent because I think it's very difficult for economies to achieve the kind of trajectory that Vietnam is right now if they don't have the talent. It's second largest workforce in Southeast Asia. There's tremendous investment in education. Those of you who are financial investors or involved with financial investing will know that there's a lot of PE, sovereign wealth fund money, very keen to come into education in Vietnam. Something that I only learned recently, bless you, that I only learned recently was PISA scores, that Vietnam actually has the second highest PISA scores which is English, math, and so on, of countries in the region, second to only Singapore. And one has heard for decades about Singapore's scores and up with Norway and Denmark or countries like that. But it's only recently that I learned that actually Vietnam is not that far behind. And that's a real attraction for people looking to establish businesses and hire talent in a market. And of course, the demographics. The percentage of population that is a working age population, and if you were to go peel the onion deeper, that's in fact a younger end of the working age population. So you've got a demographic story that's going to support talent is, first of all, a very, very critical reason. Number two is investment. And if you look at the last 5 years, the infrastructure investment as a percentage of GDP has again been the highest in ASEAN. So very, very substantial investment. And I certainly am not going to try and list here all the themes that the money has gone into, but whether it's toll roads, power plants, renewables, solar, there is a significant focus of investment and opportunity set that creates in the country. And third is governance. Many of you in the room are foreign investors or represent capital that comes from overseas, and I know that is an important consideration for you. And again, I'm borrowing statistics from others, but it's had the second largest improvement in the World Bank Economic Effectiveness Index. It now has a PPP law in place. We tend to look at new company formations, which are very strong. We look at the participation of private sector in the economy, and that's now north of 75%. So again, signs of a real burgeoning and opening up economy with strong governance. Geopolitics and trade. I mean, this is probably one that I don't need to belabor because we're reading about it virtually every day in the papers or in the blogs or whatever where one consumes their news today. From an export standpoint, Vietnam is now on a value basis, not percentage growth or anything like that, on a value basis, the second highest export dollar value economy in Southeast Asia, second only to Singapore. And the growth rate of those exports, as you see, is substantial. Multiples of 3 times faster than the growth rates anywhere else in the world. And that's, again, obviously points to a significant opportunity. And last but not least, and I'll touch more on this as we get to the section on why do we think that this ecosystem is likely to remain, it's what's happening with the digital economy. And so if you look at GME or gross merchandise value, you see that the growth rate of the digital economy here in Vietnam is, again, second to none. It's already a $22 billion digital economy in the country. It's got the highest smartphone penetration rate, second to Singapore. It's number 1 in crypto. I don't know today if that's a good thing or not, but it's number 1 in crypto. So that's a little bit of a quick zip through of, if you like, what are some of the conditions that have led to the historic growth of the economy, to that GDP that we talked about. And now I'll get to a section on, so who's following that? Who's monitoring this? Who are the types of investors who are saying, I want to be a part of this? And we look at it a number of different ways. First of all, we look at FDI, right? What's the amount of FDI? Who's bringing in that FDI? And you can see that, again, FDI is growing significantly, and it's coming in a diverse way. Manufacturing continues to dominate, no surprise, given what I just explained to you around the export orientation of the economy. But in addition to that, you can see that it's coming from many, many different places right now. So of course, Southeast Asia is important, which is the ecosystem. Wider APAC is important, and I think last night and this morning, through facial recognition, I can see, there's people from North Asia, South Asia, other parts of the region that are in the room, and so wider APAC is becoming a lot more important. And of course, developed market, including Europe, is very important. So you're seeing money come in from, frankly, all quarters of the world. Trade is liberalizing, lots of FTAs being signed, and so on. Another barometer we look at as to whether investors are keen on coming into the country or not is the robustness of the M&A sector. And of course, it was growing very nicely pre-COVID. It took a hit, as all sectors did in COVID, and is now rebounding again, both in terms of value and in terms of the average deal size, which points to investors' appetite to and their ability to find deals that are of a larger size in the economy. And so often increasing deal sizes and increased M&A activity is a barometer to a very healthy and burgeoning private sector economy. So we view that as another positive factor. Now, I talked about the participation of investors. This is a really, really healthy sign for us, which is the number of foreign investors and their representation rate in M&A in recent years. So whether this is direct M&A, whether this is them driving roll-ups or consolidation plays in the economy, but you can see that, a full total of, 12% of FDI is actually foreign M&A activities in the country, another strong barometer. And last but not least, on this point around who's participating, you see the shift over the last 5 or 6 years from a largely corporate dominated to consortium. So consortium could be financial investor with a corporate, multiple financial investors together, co-investment, venture capital, family office. But again, corporates, not that it's bad in any way, it's a very good thing, but will often come with a, 10, 15, 20, in some cases if you're putting a fab or whatnot, it could be even a 30-year view. And doesn't necessarily mean that lots of other shorter time horizon investors should immediately follow. But then when that starts becoming heavily driven by consortiums and financial investors and co-investors and so on, you know that the return horizons are likely far shorter, and that returns are likely to accrue to investors in a short time frame. So again, we view this as an important barometer. And I hope I do not offend, is not the intent to do so, anybody who may be in the room here today, but simply picking logos of a number of people to, in effect, show the diversity of participation of players in the economy, foreign players and domestic players. So whether it's the large money center banks from places like Japan or Korea, or it's the large conglomerates in Thailand or Philippines, whether it's the brand name private equity firms, venture capital firms, whether it's the large sovereigns, like a Temasek, it is not any one sector or any one subset of the investor community that is long in Vietnam, but it is across the spectrum. We're now seeing broad participation from players, into the economy. And in the bottom half of the page, you'll see, and I'm going to get to this in the third section, but you'll see the sectors. It's not uniform. So people are here for lots and lots of different sectors. It's fintech, it's e-commerce, it's real estate, it's mining and minerals, it's consumer products, it's utilities, it's IT. I mean, this is a very broad-based participation from investors in the economy. So you could say a lot of that was backward looking, right? Why did we get to the kind of GDP growth we did? And who is it that's bringing all this money and FDI and so on into Vietnam, and why are they doing it? Now let me sort of venture into the realm of the unknown and say, why do we feel that the opportunity set going forward is attractive for people considering to deploy in Vietnam today? So, sectors. I think you got to look at this from a sectoral view, which is where are we seeing people find exciting opportunities? And in our vantage point, we're seeing a lot of it in consumer-based sectors. I mentioned education earlier, but obviously retail, F&B, et cetera. In manufacturing, I think many of you in the room are aware of that. I was talking to some people about it last night. It's very scaled dollars coming into the country in manufacturing. In fintech, as we mentioned a few moments ago, on the size of the digital economy in Vietnam, on infrastructure and all the support that the governments and public-private partnership is providing to that, and in real estate, and real estate across a broad swath of consumer, residential, industrial, business parks, and so on and so forth. Now, in the interest of time, I didn't want to go through all 5 of those, but I just picked 2, because I think 1, because a lot of people are very focused on it, and then 2, because perhaps less people know about it, but I think it's one of the key differentiators, which is fintech. So manufacturing, because a lot probably focus on it, and fintech, because I think people should be quite aware of what's happening in that sector in this economy. So on manufacturing, look, there are so many factors that are driving this. You could be saying, yeah, this is cost-driven because of the OpEx advantage, because you get those really bright and well-educated people at a roughly 30% cost saving to the hinterland economies. You could say it's the nearshoring of what's happening in China, the available logistics. So multitude of reasons for it, but the reality is that the manufacturing sector here is significantly booming across so many of the sub-verticals. And as we get to Q&A in a moment, I'd love to hear people in the room describe their own experiences with that. But the second, and that I wanted to touch on as I alluded to, was really what's happening in fintech. And a barometer here is of course the number of firms that are being started and are raising capital, and raising capital often from the world's savviest VC investors. And it's now over 180 fintech firms in Vietnam, many of them incredibly well funded, driven by, I already talked about mobile penetration, but also a maturation of the regulatory landscape. That's very important to keep up with this, and a significant white space opportunity where people have not yet entered all the traditional sectors, but you can go to a mobile first approach if you like kind of what Jio did in India with a lot of what it's driving in certain sectors, and there's the opportunity to do that here in Vietnam as well. So almost $1 billion raised in the last couple of years and these are typically quite small firms. So when I say $1 billion, it might not sound like a lot to you, but if these firms are, 10, 20, $30 million in terms of their operations, to collectively raise $1 billion, that's a lot of money. So I think this is a space to really watch out for in Vietnam. And some of you will know a lot better than I do, but I believe that it's also an incredibly rich source of programming talent, which is also an important factor. It ties to the talent point, and it's an important factor for the burgeoning of this space in the economy. So I leave you with the following, and then I'd love to make this a little bit two-way for the remaining few minutes, is, I think the nation and its people are prospering at a historic pace. Businesses are thriving. Insurgent startups are becoming homegrown companies. Homegrown companies are becoming local category champions, and in many cases competing outside the Vietnam market. I think it's a vibrant economy to be in, and it's providing opportunity for investors of lots of different shapes and sizes. And that opportunity set is not narrow. I don't want to mention other economies by name, but in some places, the investment opportunity set is quite narrow. I think in Vietnam, one of the distinguishing factors is it is a very broad-based opportunity set in terms of deal size, in terms of sector, in terms of ways of participation. And we are not economists ourselves, and you'll be hearing from a chief economist in a moment, but if one takes consensus views, we're looking at in the next half a dozen years or so, and a little more than that, this is going to be close to a $400 billion GDP economy with a population of 100 million people and FDI, incremental FDI in this period of $500 billion. So if nothing else excite you, those metrics alone on the right-hand side of that page should have you wake up and take notice of Vietnam. So with that, I would love to invite, if Eric will allow, we're good on time. I made sure to go a little faster because I think this comes to life when people ask some questions, and I can cold call a few people in the audience, which I like to do. So let's have a few minutes of Q&A. There might be mics on your table, or there are roving mics that are going to come around. Yes, sir. Question here from Chris.
Sorry, right from the start, I think quite a possibly challenging question. Great presentation, thanks very much. I think the issue we've always dealt with is we know obviously foreign direct investment's fantastic, the private sector's fantastic, but what's your view on the government and their, dealing with the SOEs? And really the sort of question is, are they engaging with companies like yourself in terms of advising how to deal with the government, obviously the public sector?
Yeah, so happy to take on the question and to have others, who may be closer to government and how they're thinking about it, support in the response as well. Look, my best barometer here is what our private sector clients and our global PE firm and sovereign wealth fund clients describe vis-a-vis their appetite to increasing the scale of their investments in the country, because the Temasics and GICs of the world have far better access into those channels than I at Bain or anybody else ever will. And I see them voting with their wallets, with them putting in the last 1 to 3 years significantly more capital into sectors in the economy that aren't traditionally fully open and so on and so forth. So my inference from that is that obviously this is smart money that knows the region very well, that has access to the government at the highest levels, and they're voting with their dollars and coming in significantly. As to whether we specifically do a lot of government work, no, we don't. But that's not unique to Vietnam. That's just in general. Bain doesn't tend to be the firm that does a ton of government policy work and so on and so forth. We're much more private sector oriented.
Sorry, maybe I answered the question wrong. It's about the Vietnamese government.
Yeah.
In terms of being open for changing things in the state sector, because we've always had this issue of a lot of state companies that probably need more help and direction, and whether that's actually changing or not.
Yeah. So I understood your question. I was asking it. My response was based on the governments or government institutions I work with outside who bring tremendous capital into this country, because I think they're far better a judge of that than I am directly. But I'd invite others. I don't know, Brooke, would you have a point of view on that you'd like to give?
Yeah, I think there's a few things here. So firstly, the government is very committed to free markets and opening up the economy. That's the path forward to growth. If there's anything that keeps the government awake at night, it's slowing growth. But it also doesn't want to rush things forward in a reckless way. So it's very controlled growth. In terms of the state-owned enterprises, I think you have to look back in time and think about where Vietnam's come from, right? During the 90s, there was a clear intention that the state companies would control the economy, and that wasn't working. So in the early 2000s, they started to look at these Chobel models, where we'll pick some champions and they will drive the country forward, still somewhat under the state control. That didn't work either. And as each decade goes through, they start to realize that there isn't a future in continuing to own state-owned enterprises that really shouldn't be part of the private sector. So I think what you'll see is gradual awakening, and it's generational as well. As the leaders of the country get more experienced and they see what's happened in other countries, they observe that and then they think about applying it here. So I have no concerns at all that over time the state sector will continue to be a smaller part of the economy.
Any other questions? Yep. It's coming. Alex Hambley.
Okay, hi, thanks. You touched on China in your presentation. The shadow of China hanging over Vietnam, we're all getting involved in that debate. What's going on now? This is Vietnam's time, but we've heard that before. Can you put a bit more colour around some of your comments on China and where Vietnam sits relative to what's going on there?
Yeah. So some of you would know it was Super Turns conference in Singapore 2 weeks or so ago. It was over 1,000 global investors who came there. A number of us were very present. I had, I think, over 20 one-on-one meetings with, very senior global heads of firms and whatnot who were there for the conference. And I think universally, well, let me say a number things, back up a second just to bring the perspective to it. So I think the strongest beneficiary, given what's happening in China, in the APAC region in aggregate, will be India. Second to, this is the universal view, it's not my view, this is what I heard from the most people I spoke to. The second most significant beneficiary to what will happen in the region will be Southeast Asia. This was the collective view of the people in the room. And when you probe within Southeast Asia, which economy did they believe would benefit the most? Vietnam was number one. So if you like, it was India 1, Vietnam 2, if you did it at a country level. And when you got behind their comments and you said, okay, so why exactly is it Vietnam? So first of all, you just have Vietnam has already established itself as a strong manufacturing base that people can trust across a number of sectors and so on. And you have the risk management requirements that boardrooms around the world are conversing in right now, which is saying we can't have whatever percentage of production we have in China. In some companies it's 100, in others it's 20, but we'd like a solution other than China. And sort of the easiest, closest, with available land and talent and a similar regulatory regime, and actually your existing plant managers in China don't have an issue with, managing a team there and so on and so forth, is Vietnam. And so on that whole aspect of it, there is just a significant China appetite. I think two is people have realized that a purely export orientation in a lot of these economies causes ups and downs given what happens in geopolitical. And so people are increasingly focused on where are there large domestic consumption markets. And when you go to the presence of large domestic consumption markets, it's Indonesia and Southeast Asia. Indonesia and Vietnam in Southeast Asia are the two that bubble to the surface. So I think, most of the, if you like, China effect, if I can call it that, Alex, is in those sectors. It's sort of a strategic sourcing, supply chain base, culminating in manufacturing facilities that obviously you can't move overnight, coupled with a, by the way, it's also not a shabby domestic market to be in, given all that demographic potential and stuff and all that we'd, that we'd focus on. Yeah. I just got the 5-minute warning, so happy to take one or two more if they are, and otherwise we'll get going. Yes, sir. Sorry, I can't call you by name. Thank you.
Thanks, Suvir, for the presentation there. The macro story for Vietnam is quite well known already. The secular and structural appeal is acknowledged. I suppose the question for you is, can you cite a few challenges that would prevent Vietnam from meeting its peak potential? Whether that's going to be in terms of a sector, industry, political, economic-wise, that you see kind of brewing up. People have asked what would prevent Vietnam from moving up to the next asset class, from frontier to emerging to maybe developed markets one day.
Yep. Yeah, it's great. It's a great question, and one that a number of us ponder. And Andrea, I'll give you a heads up that after I give my remarks, I'll ask you if you have anything you'd like to add to this as well, so you have a moment to collect your thoughts. Look, I think there's a couple possible challenges. Again, I can't predict the future. One was alluded to in the question from Chris, was obviously, the government and regulatory regimes that in the recent past have been quite supportive to everything I've described here, but I think that's always a concern in an economy like this if that was to reverse course for whatever reason. It's not something I expect, but I listed as a concern. I think two is the OPEX advantage, as I called it, or the talent cost advantage. It's a very strong, capable talent, but at a reasonable price point. How long can that sustain itself? I've had a number of meetings with colleagues this week with CEOs of firms in town, and they're talking about people who are, changing jobs every 1 to 2 years and commanding 30% increases at every jump that they make. And that while I understand that in a fast-growing economy, that does create at some point a challenge for companies. And third, and again, I will defer to the economists and Don and others in the room who know far more about this than I do. But we've seen economies have bumps in the road based on what happens in the real estate sector. And the real estate sector in Vietnam has developed significantly in the last decade. And there's a lot of money that has gone into that. And I'm certainly not privy to what's the in-depth financial health of all the banks that support the development of that sector. But if there was to be a default event with a major player or some sort of implosion in the real estate sector, I think that could give foreign investors pause as to the depth of the financial markets and the systemic risk, if you like. So those would probably be the three, kind of regulatory, talent, price escalation, and real estate that might be things that would concern me. But Andrea, what would you do most of Bain's work in the market? What is your what would you add?
Yeah, I would agree. Definitely, real estate is up there in the list. I think obviously it's always a cyclical sector. It feels like the banking system is better capitalized, less leverage than it was, during the last cycle. That's definitely up there. And then the other one is, from a geopolitical perspective, similar to Singapore. The beauty both of Singapore and Vietnam is the ability effectively of being a bridge, if you may, between China and the US. But that status might be challenged if tensions continue to escalate, and that obviously will have repercussions in the country.
Thank you. Is there a final question, or if not, we will time. Okay, I was just given 1 minute, but that's Eric likes to be a minute ahead of schedule. Excellent. Thank you so much for the opportunity. I wish you good luck with the rest of the conference.